back to my channel. It's been the longest time. I had a lot of things going on with work, with trading, and a lot of things that kept me away from. I was actually busy with a lot of other stuff. But anyway, now that we are here, let's dive into the markets. And I hope you've had a good trading week the previous week. I haven't traded much, and I will be back in the markets from tomorrow. So anyway, to begin with, let's start with Nifty. Since the week is starting tomorrow, I thought we should start our analysis with a weekly time frame. And usually also I always recommend my previous videos also a multi-time frame analysis is always helpful to mark your levels and zones. So now if you look at Nifty, right, it has been respecting this trend line, an uptrending trend line from this consolidation zone that the market had seen around the 23rd of September 19 and 9th of November 2020. After the market broke out from here, we have seen this trend line taking the market up, propelling it up. Every time we come close to the trend line, we've seen good support. We've seen the first support here, we've seen the second support here, and this has been the all-time high on a weekly time frame. This zone around 18,600 to 18,750. These zones have been the previous all-time high. So Nifty, for that matter, is still away from all-time highs. However, Banknifty has faced rejection from the all-time high. So for any bullish trades right now, I would personally recommend Nifty. So the asymmetric triangle, the ascending triangle you see on Nifty, I believe that after a little bit of consolidation or a retrace of the trend line again, we are going to see all-time highs. That has been my view. I'm broadly bullish. However, the recent price action could be a profit booking because the markets were moving almost 90-degree vertically up. So anyway, if you look at daily right now, on a daily time frame, this is the channel that we've been discussing, the channel that broke out. And ever since that broke out, we haven't actually retested the zones, right? So, I mean, a lot of you could argue that this was the retest, but I believe that we could even eventually come back down to retest the 200 DMA and then start a journey upwards, or we could start right from here, right? So one thing that we got to be noticing over here is the 21 DMA. Every time the stock, any script moves far away from the 21 DMA, there's always a time-wise correction or a price-wise correction. Now the markets could consolidate in this 18,000 to 18,300 zones for a time-wise correction until the 20 DMA approaches here, or we could fall a bit more until the 17,800 levels and then start a journey upwards. So I am broadly bullish. However, I could be wrong and the markets could prove me wrong. But until those levels come, I will keep my bias as bullish. And my bias only changes below 17,500 levels. So even though we have like a 500 point downside over here, we could definitely trade it as intraday traders or positional traders. But right now, I don't have a lot of conviction to short the market because there's not a lot of indication to short it positionally and hold the positions overnight. So coming to a smaller time frame, how we could be trading this tomorrow in Nifty is, yeah, you see these zones, right? This is a very strong support zone. As far as the market stays above it, this is the 18,050 levels. As far as market stays above it, looking at Singapore right now and the global price action on Friday, US markets were super bullish. So considering we open gap up, anywhere between 18,050 to 18,160, right? For an option buyer, especially an intraday option buyer, I would not recommend any trades because this is noisy. There could be a lot of stop loss hunting in this zone and I would recommend you to stay out of it. So the only time we are going to initiate a trade on the long side or the short side is, now we have three cases, right? The three cases are we open flat. As far as we open flat and we manage to stay above 18,045, 18,040 levels, for that matter 18,000 levels, right? The whole psychological 18,000 number. As far as we stay above that, there are going to be no short trades initiated in option buying. The only short trade we could take is if you see a 15-minute candle closing. Now if we open gap down, right, if we open gap down flat to a negative bias and we have a 15-minute candle closing below the 18,006 levels, 18,000 levels, this is the 200 EMA on a 15-minute time frame. If you do see that, then yes, you could see some momentum on the downside. There are a lot of support zones, right? But the only next strong support zone that I see from where markets could actually bounce back up is a bit far away. That's around 17,800 levels. So that opens up a 200 point window for us in Nifty to short the market. But that is only if we see a 15-minute candle closing below 18,000, or if we directly open below 18,000 and continue to move down with a day as stop loss, we could initiate a short trade and book our targets around 17,850, 17,800 levels on the short side. Now, if you open directly gap up above 18,161, right, then everything that you saw on Friday was just a trap. It was a bear trap because this has attracted a lot of retailers to short the market. So if at all we open directly above 18,160 and even sustain the first 15-minute candle above it, we are definitely gonna initiate a long position for the target of 18,267, and if we manage to close above that, I would even consider taking my position overnight. I would carry my longs overnight, because the next resistance is far away, it's around 18,400, 18,450 levels. So that is the trade plan in Nifty. As far as we are between 18,000 and 18,160, I would not want you to, you could scalp. Now that depends on your skill set. If you're a scalper, you have your own zones, but to hold your option buying positions within this zone, you're just going to lose a lot of premium. There's going to be a lot of decay, and I wouldn't recommend that for you. So that is for Nifty. Now if you look at Bank Nifty, let's begin with a weekly time frame. In Bank Nifty, if you happen to notice, you see this zone that I've marked, right? The 43,633 levels on a weekly. The markets have never closed above it. All you see the price going above it, it has faced rejection. These are just rejection wicks on top, but on a closing basis, how I always tell you that a candle closing is very important in any time frame. So if at all the market closed above 43,633, if you saw a weekly candle close above it, you could be super bullish and play the all-time highs. But since we have faced rejection from the same exact zone where the market faced rejection on the 12th of December 2022, and then the 19th of December, the 2nd of Jan, every time the price has come close to this, we've never managed to close above it, and we've only fallen back. So now this is almost like an engulfing candle. But if you look at this, right, if you look at the 19th December weekly candle, this was a 3.59% negative candle, an extremely bearish candle that had taken away 3-4 weeks gains, right? But the candle right after that was a 3% gain. So just because you see one red candle at a very potential short zone, this could only be a profit booking for the people who have been holding longs from 41,700. They've seen almost a 2,000 point rally in one direction. So obviously near a zone where a resistance is bound to work, people would be booking their profits. And this, for me personally, this is a profit booking. I don't consider this as a bearish entry. That makes it clearer on a daily time frame. If you look at a daily in Bank Nifty, again, as we discussed in Nifty, every time a script or a price moves far away from the 20 DMA, it tends to pull back to retest it or spend some time-wise correction. Again, now this is very unilateral stock propelled downside, because this is mainly because of HDFC twins, HDFC Bank also. And since that's the biggest weightage in Bank Nifty, obviously this was bound to happen. So now for an option buying overnight positional trades, there are no overnight on a daily time frame. There are no overnight buying trades until you see Bank Nifty close above 43,550 on a daily, or closes below 41,500 on a daily. Now you see a daily closing on either side. That is a very good entry for you to have a trade that you could hold through the week or for 2-3 days as a swing trade. For now, we've got to just play intraday volatility and try to maximize the profits on that. So on a daily, a very strong support zone would be the 42,300 levels, because that's the 20 DMA, and I would expect a bounce back from there. And even if that's taken away, you could see some buying from 42,000 psychological levels, right? So how this could look is if the market even goes down and you see a long wick formation on the bottom side, right? On the downside, if you see a lot of buying, if you see a bullish hammer or a candle that eats up 50% of the losses from Friday, that could be a long entry for 43,500 levels. And we have to wait to see how price action plays around then. And if you see a closing above 43,600, then we are definitely long. And if these levels are not withheld, if the market turns super bearish and these levels are not working out as support, then around 41,500 is the time to be cautious, to either build your longs or to wait for price action to give you a short entry. So that's on a daily. Now if you switch the time frame to 15 minutes that I personally use to trade intraday, this is very interesting, something that I noticed on charts. This has been very interesting, and the way this could be a trap, I will explain this to you. Now you see this channel, right? A parallel channel, almost like a raising wedge from the 31st of March. We've seen support on 31st of March, then we've seen support on 10th of April, and finally we have reached a point where the markets have come to the lower end of the channel. On the upper end, this was resistance on the 17th of April, the 18th of April, and then 2nd of May and the 5th of May, right? Now one trade idea that I had suggested to my clients was the time the markets had reached the upper end of the channel, somewhere around these levels. Along a minute, I charge my laptop. Kindly bear with me. Yes, and we are back. So if at all someone had shorted here, right, this was probably the Thursday expiry last candle, right? So if someone shorted here, they got a very clear one-sided move towards the bottom end of the channel. This could be a great trade to capitalize, right, to make money. But anyway, now that it's gone, now we are again planning to play the channel unless the lows of Friday are taken out. So what my trade plan is right now, trade plan in Bank Nifty is, considering that we open gap up, right? If we open gap up anywhere between the 43,000 to 42,700, between these zones, it's a no option buying zone, intraday positional, whatever, it's a non-option buying zone. We are not going to take any trades. We've got to be patient for the market to give us a setup, and that setup walks up to us as far as we see a 15-minute candle closing above 43,000. Now, if you open directly, right, if you open gap up strongly directly above it and tend to sustain the first candle, I would be going long, and these trades that I would be taking, the long trades, would be more of scalp in nature. Above 43,000, my first target would be 43,300, above which 43,500, and eventually the upper end of the channel, where we see whether we could be booking our profits or initiating short trades. Now, we will see how the price works over there. But between 42,700 and 43,000, that's a no trading zone for an option buyer. We're not going to initiate any trades. If we happen to open flat and we see a 15-minute candle closing below 42,500 levels, then our first short entry will be initiated at 42,500 for the first target of 42,300 and then 42,000, which is a very strong support zone. I would recommend to book all your shots at these levels. And above 43,000, we are going to play for 43,300, 43,500, and then the upper end of the channel. And as far as we've mentioned the no option buying zones, please give heed to that, because I don't want you to get stopped out and lose your premium over a market that could not move. Also, there's a very high probability that tomorrow could be a volatile, noisy day, because we've seen a 1,000-point fall on Friday. So consecutively, the market to move, it is possible, but the probability of that is lesser than usual. So if at all it's a noisy day, just stay out of the markets, wait for the Monday closing to initiate any new trades. And as far as our levels are being played out, we are definitely going to trade it. And if there's any other updates, I will try my best to update you through Instagram. And that's it for now, and I hope I get to see you more frequently, and I will be more regular with my videos, and I will be seeing you with my market analysis daily from now on. So anyway, protect your capital, be safe, trade safe, and it's a pleasure to be doing this for you guys again. Anyway, all the best. Let's have a good Monday tomorrow.